ladies and gentlemen. So this is a quick video preview for the webinar, which is going to happen in a few moments. Look, there are things we have to deal with, and the NVIDIA earnings are one of those. Basically, the whole market is kind of focused on one company. It's kind of discounting everything else. It's just everybody's talking only about NVIDIA, how it's going to determine the further path of the stock market. But look, okay, there's more to that, okay? About all this and a little bit more in the session right now, so hopefully you'll enjoy the session. And yeah, I'll hope you'll enjoy it, and I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Yes, the 19th of November, 2025 still. We're getting closer to the end. So can you imagine, just like, what, like month and a half left until the end of 2025? And what a year we had so far, in my opinion. Honestly, from what I kind of remember, as much as I am in the markets, and so I'm in the markets from around like 2011, this has been one of the biggies, to be honest, in my opinion. But again, you know, again, maybe I'm being biased. Maybe the fact that the latest year is the most memorable all the time. Maybe you're forgetting what happened in, like, I don't know, like 7 years ago or something like that. But anyway, this year is certainly an interesting one. Interesting one from the hypocrisy side, in terms of, let's say, what's happening here and what's happening there, and also interesting from the technology side, that and also interesting that it's nice to see that people see, so it's nice to see that people see that not everything is rosy, and not everything is kind of straightforward. Like, nothing is as straightforward as they present it to be. Anyway, look, certainly, before we go any further, before we jump into the markets, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, like I said, it's an interesting day today. We're having the NVIDIA earnings. I'll talk about the company in a bit. Also, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So yeah, the two images that we saw right now here on our website, I think these are very, very relative right now. So I'll pick up a little bit more on those in a bit. Look, in terms of the economic calendar, I think nobody gives a damn, for today at least, because the main thing that on everybody's mind is, of course, this little corporation, right? Let me just remind myself again. Market cap. Let's check the situation right now as of yesterday. So 4.4 trillion, just that's the valuation right now of NVIDIA. Apple is kind of stepping on the feet of NVIDIA almost. Well, not far. Apple needs to surpass that 4 trillion valuation. I mean, 4 trillion, like, these numbers are just, if you imagine like this from the country's perspective, right? I mean, how much a country is sometimes bringing. So let me just compare so GDP, for example, GDPs of some countries, right? So, I just Googled Saudi Arabia's GDP. So basically, that's like 1.6 trillion in 2023, estimated around 1.27 trillion in 2025. So you can imagine like your country like Saudi Arabia brings in like a year a trillion, right? I mean, but these guys are like valued at 4 trillion. I mean, these can be just countries on their own. So, and well, talk about too big to fail. Of course, that's of course they're for sure they are in that this is in that list kind of. But this rankings here, I think it's like a like a sports table for for companies. Basically, the higher you are, like I don't know where the relegation level is for not being too big to fail. Maybe it's like around 10, something like that. Like 10 companies are too big to fail, and that's how they're going to get bailed out by the government if something happens. But certainly, yes. NVIDIA is taking the crown here, and we are watching the earnings today very carefully. Look, why I said like economic data doesn't matter. No, it does matter. Of course, it matters. But certainly at this point today, it's kind of getting overshadowed. I'll talk about UK inflation in a bit, but certainly the other pieces of information that we should be getting is the trade balance here today. Looking at the schedule, November 19th here. So we should have had like data here, but for some reason now it's not showing on the economic calendar. It's showing because if you remember on Monday we still had some data here. Now it's not. So my question is this not gonna is this gonna come out or not? Are we gonna get the trade balance numbers or not? So I'll leave it till the end of the day. Certainly, normally what time we should be getting that around. Okay, so basically before an hour before the U.S. market bell, opening bell, and yeah, I mean at the moment I'm not seeing that here in the schedule. Maybe it got removed. Maybe just a standard procedure that this is how it goes. But certainly tomorrow, that's the big number that everybody's waiting for. Tomorrow we should be getting NFPs, and let me just double check. What do we have a forecast right now? Average hourly earnings, initial and continued jobless claim, non-farm payrolls, 50K. Okay, so basically almost like more than double a little bit more than double than the previous figure. Look, can we trust the data? I don't know. And to be honest, this to me, given the situation, what happened and like how it went all through. Look, this is going to be September number, right? And we're not going to get the October number, but something tells me that there is a possibility that we could see even higher than the than the forecast number, because this way you can actually kind of the U.S. government can kind of in a way take advantage of the situation and of this kind of little chaos that happened, and basically present better numbers than they are. In general, we all understand that non-farm payrolls are suffering. In general, the job market is suffering. People are not really going to be very happy going into next year, because I think that maybe until the end of this year, in order to maintain the U.S. consumer happy, we're not going to see major layoffs. We have seen announcements happening, but maybe the actual layoffs are not going to happen yet. Maybe they're going to wait until New Year, so that not to look very cruel. But certainly, this is a big problem, big issue. AI, all this spending on AI, all this capital expenditure, and that's of course killing the jobs, the entry level jobs, the admin jobs. Look, I understand I said it before and I'll say it again. I understand it from the perspective of the company, because yes, it's great, it's cost cutting, but then again, it's going to benefit them. But if at the end of the day I cannot buy that laptop because I have lost my job, then I really don't care about like what kind of GPUs, CPUs is somebody using, because again, I just cannot, so I'm not going to buy that gadget unless the government is going to make it mandatory for everybody to have a gadget. So yeah. Look, long story short, for now we're watching like I said, we're watching the NVIDIA earnings carefully. Let's have a look in general. You know what? I think I'm gonna just jump into the market, but actually, wait. What happened with UK? Inflation numbers 3.6 as expected, lower a little bit. Okay, and month on month higher as expected. PPI core output here on the higher side a little bit. Okay, input also okay, input on the lower side, right? Anyway, retail price index 4.3, a little bit on the lower side, but not much. Look, in general, inflation remains on the higher side. If we compare it to the Bank of England's inflation target of 2%, then well, you see the number, right? In general, is that a good thing for the market, for the stock market, UK stock market? No, not really. But again, it's the pound that we're going to be looking at. But look, I'll pick up on that in a bit. First of all, let's see what's happening with the stock market. Look, yesterday the stock market was on shaky grounds. I mean, it ended. The U.S. indices ended in negative territory. All three major indices losing kind of around 1%, and Nasdaq was the biggest loser because again, it's tech. Everybody's worried. Oh, by the way, I didn't put my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Feel free to ask questions. Feel free to join in the conversation. Because I'm more than happy for you to contribute. If you have anything to say, you want to share information, please do that again, because that's the show. That's why it was this show all about. And I think we can all benefit from each other. Look, Nikkei, it took a decline. In general, Nikkei right now is not only worried about what's going to happen with the stock market in general. Are we going to see technology kind of dragging the stock market lower? I think that Japan right now is also dealing with the issue of Sanae Takaichi kind of expressing herself on how she's prepared to send troops to Taiwan in case China invades Taiwan. Look, I don't really think that China will invade Taiwan because again, it's not economically not worth it. Unless there is capturing land. I think for China, Taiwan is actually in a good spot where it is. So it's because I think that it can just kind of keep the reputation running that that's not that's not what we want. We don't want land and everything. In Taiwan, they still have they still are cooperating together with Beijing, right? So Taipei and Beijing are still kind of cooperating, so they cannot really not cooperate. It's only if we see Western troops kind of landing in Taiwan, then yes, then the issue arises, of course. But anyway, like I said, for now with Japan, Japan needs to deal with some domestic issues because again, Sanae Takaichi, who's in favor of going for those rate cuts, for increasing government spending, I really don't know if that's not going to backfire too much because look, the Bank of Japan is kind of in favor of going for some hikes because they want to control inflation. They believe that inflation might spiral, and again, I think there could be a removal. They want to maybe remove the carry trade, where everybody's borrowing, getting loans in yen, and then kind of investing those in somewhere abroad, somewhere on a bigger interest. Again, it's an interesting thing right now. In general, I think Japan is a unique economy. that managed to survive with a huge amount of debt. Let me just double check. Yeah, the debt to GDP. Let's have a look. Okay, so where's that number? Right. Okay, Japan has. Where I want to try to find this highest national debt. Countries with highest national debt. Maybe this could be actually a good website to keep an eye on. So so we have like a national debt, debt per capita, and debt as a percentage of GDP. So look at this. Look at these numbers, right? I mean, if we can trust these. So United States, of course, is leading the way in terms of national debt, but in terms of GDP, Japan is in kind of third row, right? Or actually no. Why is it not like? Is it? Can it filter? Right. Okay. So we are seeing from the largest economies. I think this is a bad website to keep to have a look at, because what I'm seeing here, actually, Asia, Japan is the the biggest in terms of debt percentage of GDP. So debt to GDP. So 237. Now this is something a little bit more accurate, actually. Look, the problem, like I said, Japan is one of the so-called unique countries where they manage to maintain this big debt, but without having a major crisis. So again, but eventually the issue arises. It's not like U.S., right? U.S. can do the same thing, but they're their superiority. They're like a lot is connected to the U.S. dollar especially. But Japan, while their interest rates are low, they can maintain those that credit line, and that's why it becomes attractive. But once it starts increasing rates, yes, on one hand you can help remove the issue with your devaluing currency. You can strengthen it. However, then and you can also attract investments into your country, and you can issue debt, government debt, at a higher percentage. So in a way, it becomes an interesting option, to invest into Japan. However, then everybody starts to ask themselves how good of an economy is, how can it be sustained. So, are we not going to get like a big problem later? Again, it's all debatable. It's probably a separate session that we need to. I need to prepare myself for this a little bit more. Certainly, but again, Japan, like I said, is an interesting economy and has been so far. And I think that, like I said, if they suddenly they manage to raise the interest rates, I think this is a new step, a new path in the Japanese economy, where they might attract investors into the country. But again, at the same time, again, we'll see how will it backfire in general inside or not. With the population, and the yen could get stronger, but then again, the borrowing costs could become a little bit more expensive, and this is where you'll have to also deal with people's psychology, which is kind of used to that cheaper lending. So again, it's a lot of tricky moments here, but right now, like I said, the fact that Sanae Takaichi kind of did, I wouldn't say threaten China, but in a way said that they're ready to send troops if needed to protect Taiwan. That sparked a little bit of an issue, a little bit of a concern, in, if I can call it this way, in Beijing. And this way, basically now, like China is trying to punish punished Japan, and from the latest that I heard, that it's the fish exports from seafood exports from Japan. They're banning those, and banning Japanese imports of seafood into China. We'll see how long that will last, because again, still we know that the Chinese consumer does like, the products, and again, we'll see, we'll have to see how long they can do that. And in general, look, the two economies are working together, and I think that they will continue working together. Only a big conflict could kind of spark issues in there, or force them not to work with each other anymore. However, I hope it's not going to get to that point. Let's have, actually, speaking of China, then let's have a look at Shanghai Composite. Look, I talked about this purely from the technical perspective. I said that if we do drop below the lower side of this broadening triangle, I'm going to lean a little bit more towards the downside. And to be honest, so far so good. If you're looking for some higher levels, I'm not going to do anything else here. I'm just going to stick to my game plan, and I'm going to wait again for another push above the psychological 4,000 zone, and only then I'm going to go to the upside. Until then, I'm not really doing anything here with the Shanghai Composite. In general, I think that this index will remain subject to what's going to happen in the global economy. Speaking of global economy, and one of the components of the global economy, US. So yesterday we saw indices continuing to slide, and of course the fear of not seeing a rate cut in December. That's what's also driving the fear. Also, in addition to that, we have tech, where everybody's questioning the capital expenditure of those big companies, which, by the way, if you haven't noticed, kind of this whole thing around AI kind of can't calm down a little bit, in my opinion. If you see the news now, they're mentioning it, but not as much as they did before. So either we're, maybe everybody was told to put their tone down a little bit, because people are getting frustrated, and it's way too much for people, and because all this AI thing, it's not really helpful. So we're hearing these deals made quietly now, because again, OpenAI is of course, in epicenter of everything, and the company's not public, so we do not really know how the funds are managed in there in general. But as I keep on calling it, a little money laundering scheme, where all these companies kind of are lending to each other, and it's just kind of the circle economy, where they're putting money to each other. It's like, oh, we're investing here, we're investing there, and eventually everybody kind of just writes off some debt or something like that, and or not sorry, it just writes off some revenues, and shows that maybe a slightly more clean balance sheet or something. But again, it's another big subject to discuss. In general, I think that at the moment, I think people are catching up on that, and everybody understands that this is, well, it's a little bit unlogical, what's happening, and it's way too much, and people are suffering. Your ordinary people who are going to be losing their jobs because these major giants are creating those fascinating deals. That doesn't sparkle very much. And the name of this webinar today is kind of market dependent on earnings on one company, right? Look, this is the sad part, because in general the economy is much bigger than these guys right here, right? Yes, the stock is drifting lower, but something tells me that the stock might shoot back up. We'll see, of course, how it plays out, but certainly it is we are at an interesting place, where one company kind of dictates on what's happening in the market. And Is that a good thing? I never saw this as a good thing, to be honest, because it's, you know, one of those where you become too big to fail and the government, the taxpayer, will be bailing you out. Well, because why? Because, you know, they employ a lot of people, and it's easier to bail out that company rather than, you know, kind of release a lot of unemployed people into the public, into the mass, and create more issues this way. So because it's politically, it becomes kind of not good, especially when, you know, when the upcoming midterms are on the table. Anyway, so yeah, we'll see what's going to happen today. In general, from what I read, what I understand here, that NVIDIA is bragging right now that they have around half a trillion orders. Let me just, yeah, half a trillion. The company has half a trillion or 500 billion in orders in 2025 and 2026 combined for its chips that are at the heart of the artificial intelligence boom. So, okay, certainly numbers like that are good. You know, this should be good for the stock market, but the stock market it's playing, you know, like we don't trust right now what's happening, and that's why we're selling the stock. However, I think everybody's kind of really getting ready to buy this stock again. However, purely from the technical side on the NVIDIA stock, look, we are approaching a key area of support around 176.76 zone. So that's something to keep an eye on. Certainly below that, we have the 164.58-ish zone. This is a good area of support, as you can see yourselves, marked by the low of the 22nd of July, and also marked near the low of the 5th of September. So again, becomes a good area of support. However, that said, we need to clear the 176.76 area. Why? Because it also coincides nicely with the 100-day EMA here on my daily chart. This is a daily chart that I'm looking at. The blue line is the 100-day EMA, the green is the 50-day EMA, and the white one is the 200-day EMA. So yeah, we're, like I said, we're watching this carefully. I think that there is a good chance of maybe seeing a drop to this area right here, to this 176.76, and then maybe rebounding and pushing back up. However, if we do break it below this 176.76 zone and we stay below it, then, well, I'm going to lean a little bit more towards the downside. The S&P 500, ladies and gentlemen, the S&P 500 is looking quite bearish. By the way, the Dow Jones Industrial Average, look at this. We're going towards that 45,000 kind of 700 zone, and let me just double check very quickly, what's happening with the US 30 here, which is the Dow Jones Industrial Average. This is where we closed, around 46,091, right? We're actually above this hurdle right now, so there is still a chance for a drift lower, don't get me wrong. So maybe today the market could remain fearful. So this is the scenario in my head, basically. The market today could still be in the red, could still go lower, but let's say NVIDIA comes out with spectacular earnings once again, or maybe let's say they're not the most spectacular, but just a little bit, so the market still sees, you know what, this company has potential, and there we go, let's pick up this stock at a lower price, and then let's drive the stock market higher. This is where, like I said, this is where indices could pick up as well and could travel. So in a way, it's for everybody's a win-win. The bears got what they wanted. They wanted maybe to test this 100-day EMA on the daily chart. The bulls are getting everything what they want, so we could see this happening here. So a rebound and a push back up. So in a way, kind of like I said, it's pleasing the society on both sides of the society. So it's pleasing both sides of the society. If we do break the 100-day EMA, then great. Okay, I'm going to go lower, but for now, I'm being very careful. S&P 500. So yeah, there we go. We broke the lower side of the triangle. Let me just double check where we are at right now with the S&P 6,629 on the cash, a little bit higher than the previous. Basically, we're near this hurdle, this the low of the 7th of November. Yesterday we cleared and created a new low of November because that was the previous lowest point of November. So we created a new one. Now we're currently trading near the previous lowest point of November. Let's see if this is going to provide resistance. If it can continue providing resistance, if it can, great. I'm going to consider a move back down right here. So in terms of the upside, look, it's pretty straightforward. I like this triangle, and I'm still going to keep it on the table here, but I need to push back inside the pattern here, inside this triangle, and also push back above the 50-day EMA. Sorry, my voice I think is going down, so I need to reheat my my throat. NASDAQ 100, ladies and gentlemen. NASDAQ 100. Look, again, we traveled lower yesterday. We didn't really test this area around the 24,200. And I think this is a key area of support. I'm seeing the index right now rising, but I wouldn't really be surprised if we actually ended up testing that 24,200 zone. I like it a lot, to be honest. So basically like a quick drop to that area, a test of it, and then a rebound back up. Because NVIDIA's earnings are going to be fascinating. So why not? Why not see that scenario? And then tomorrow, when we prepare for tomorrow we'll see fantastic numbers from the NFP, most likely. Yeah, it's we'll say all the cards have aligned perfectly. So, then the stock market could rebound and recapture all the losses that it made last week. So, maybe not all, but it could be a decent correction back up. Again, let's see if that's going to be the case. Certainly, this is the case in my head. Let's see if it's going to work out. Again, I'm not going to be surprised, like I said, if we do see a little bit of a drop here again. Maybe not as strong, but okay, again, I really don't know. I don't have a crystal ball. Oh, I can see that I'm frozen again. Why am I getting frozen? Ladies and gentlemen, why is this... let me just double check what's happening here. There we go. There's my big round face here on the screen. Look, ladies and gentlemen, I'm sorry for that. Again, just noticed that I got frozen. So that's my game plan for the US indices. Let's see if that's going to work out or not. The German index, DAX. So DAX, Germany in general, European markets are a little bit on a fragile side, I would say, And look, we had a strong decline. This is just look at this gap. Do gaps get filled? Yes, we can see it here, clearly. So gaps do get filled eventually. Sometimes it takes time, like for example here, but this gap, look, I think that's what I'm saying. That's my idea maybe for a retracement back up here, although I do not agree with the fact that the stock market has kind of logic to or has the moral ground to retrace back up, because not everything is that nice and sparkly as it seems. But certainly we're living in a different reality, in a parallel one, where nothing, all negativity doesn't matter. So, I do get the point that I'm not being that guy who's like advocating for a crash or something like that. No, I'm the guy who's advocating for some sort of reason, right? Because this, like I said, to me, this whole AI spending, no, I'm sorry, I don't really. Do I believe that AI is here to stay? Yes, of course. AI is going to stay, and like we had websites, staying. We had big valuations on websites, and then what happened, and then but the websites did stay. We're all using that, where everything is online. So which is fine. I don't have a problem with that. I have a problem with the stupidity of these valuations, and the spending, and I have a problem with the big people who are talking about how this is a great thing for everybody. No, it's not a great thing for everybody. And if somebody's going to tell me right now that, oh, but you can always those people can change their jobs, they can gain a new skill, a needed skill, and just go and work there. Well, why don't you do it? Why don't you do it? Anyway, so yeah, ladies and gentlemen, that's not, like I said, not everything is that straightforward. So when it comes to jobs, then suddenly for everybody it's like straightforward. Oh, you can get yourself a new job, right? When it comes to AI spending, well, you see, it's not that straightforward. Okay. Anyway, so that's the hypocrisy. One of the hypocrisy moments I was talking about in the beginning of this show. Ladies and gentlemen, let's have a look at the FTSE 100. Look, 50-day EMA shown as the green line. Wonderful. Good hold up here. Technically, this is really an interesting place. Like I said, I'm kind of leaning for a little bit of retracement. At least I wish, but certainly the fact that we dropped below that 9,639 zone, it opened the door to some lower levels, and it has worked out beautifully here. Look, in general, if I'm looking for some lower levels, I think I need to see a drop below the 50-day EMA and kind of aim for the 100-day EMA. For the upside, if you really want to get a little bit more comfortable with the upside, okay, 9,639 could be an option, but I think we could actually start looking at some higher levels already if we do push back above the 9,610. This is the low of Friday, or should I say the lowest point of last week. If we clear that, maybe a little bit of a larger correction back up could be possible. Let's have a look at DXY dollar index. Okay, pushing back up. I don't expect anything else from the US dollar apart from the fact that it should be rising, especially on the speculations of not having a possible cut in December. So everything is kind of really in favor here. The stock investors are worried about AI and worried about expenditure, and everybody's kind of trying to find a safe haven of some sort. Could be the yen, could be the US dollar. Here we go. At the moment, I think that there could be some more upside. Do I believe a test of a psychological 100 level again? Yes, I do. Or maybe at least 99.98 area where the 200-day EMA is right now. Looking at the VIX, by the way, look at this. The VIX, the fear index, is is elevated. But is it time for it to reverse back down? That's another question. But I think, look, there could be more upside. We do have a reference point where in October we saw this major spike here and then a major reversal back down. Now it's a more gradual one, and we do have like I said, a reference point here. In a way, we could travel somewhere closer to the 30 mark gradually, but like I said, with my ideas here, with for maybe a possible market reversal back up, maybe this could actually drift back down, the VIX index here. Let's jump into the currency world very quickly. AUDUSD, yep, flirting with the lower side of the triangle, this upside line. Okay, 0.6469, that's what I'm keeping an eye on. If we get a nice drop, here, great, wonderful, more sellers here could join in. And again, not the most best picture perfect image here, but maybe left shoulder, maybe head, maybe right shoulder, maybe the neckline, So in that case, maybe a possible break lower could be an option here. And again, it comes in line with the US dollar strengthening. So if it comes in line with the US dollar strengthening, then that means that the AUDUSD, like I said, could be seen moving to the downside. But again, I will not do anything until I see a clearance. Until I see a clearance of this area, of this upside line here at the lower side of the triangle, and then yeah, we can go from there. AUDNZD pushing back up. Let's see what's going to happen. We've climbed back above the 1.1490, and certainly the big question is, can we go to the upside here? Can we go higher? Look, I'll be a little bit on the careful side. My game plan here has worked out nicely, apart from one thing, that I should have started from here instead of this hurdle, this 1.1490. But anyway, it kind of worked initially, but it did go lower. But then we found this was a good support, and I have to admit, I kind of discounted it a little bit. But I think that this is what needs to be done. I think that if you're looking for some lower levels, wait for a drop below the 1.1445, and then we could go lower. AUDCHF, ladies and gentlemen, AUDCHF here. Look, it's an interesting one, but you know, at this point, I'm not really examining the downside. I'm only looking at some upside here, but my upside is only from this area, from the 0.53 kind of zone-ish. For the downside, okay, we can keep an eye on something around here. Maybe, just maybe, let me just put this on the chart. There we go. So this little hurdle, the 0.5164, 65, and as we drop below that, could attract more sellers into the game. AUDJPY. I'm not going to touch the AUDJPY because it's not really doing much right now. And it's our risk on, risk off monitor. Whenever the stock market goes lower, Japanese yen should pick up the pace. But in this case, we're not seeing that. We're actually seeing the pair being flat. So that's why I'm advocating for maybe on the indices seeing a little bit of a reversal back up. So let's see, because again, this to me is weird, but that, you know, we're not seeing a better move here in AUDJPY, because if the stock market does like normally retrace lower, does fall off the cliff, honestly you see AUDJPY drifting nicely to the downside as well. But at the moment we're not seeing this. And for some reason my camera keeps on crashing. I don't know why. Like, honestly, oh no, the wrong image here. Ladies and gentlemen, apologies again for this. For some reason, like I said, the camera keeps on crashing here. Maybe something is wrong with the cable here, or the signal, or the nest in my computer. Anyway, it could be a lot. Let's jump into EURUSD. Where's my beloved EURUSD? So look, I talked about this recently, and I said keep your eyes on this downside line, because in a way we could see this one, you know, testing this downside line from above. It did. Now the question is, can we see a rebound back up? Well, I don't want to rush into things, ladies and gentlemen, but certainly this little area that I'm going to be keeping an eye on, the 1.160506 zone here. Maybe by the time it could reverse back up here, maybe the 50-day EMA could approach this area as well. And then, you know, if all the breaks happen, then we could see a move higher. But look, let's face it, the downside scenario is becoming interesting as well, especially if it falls below the 1.1540 zone right here. And we'll take it from there. So yeah, in terms of other pairs, EUROJPY, let's have a quick glance. This one continues to push higher. Japanese yen, nope, cannot really pick up the pace here, cannot really get buying interest. That's fine. Euro NZD, what's happening here? It's a nice little range here, ladies and gentlemen. So yeah, there's a nice little range. I need to see some sort of clarity here in terms of seeing a breakout here. Break through one of the sides, and then yeah, we could go from there. But at the moment, yeah, we need to see a clearance. But this is actually a good pair. Interesting. I like it, because expect a break to be maybe a somewhat of a strong one, because this is EURUSD we're talking about. This one does like to move. Also, let's jump into, actually, you know what, let's jump into GBPUSD very quickly, ladies and gentlemen. GBPUSD drifting lower. It didn't like the inflation numbers much, because those were kind of on the lower side, and as expected, but on the lower side. So this is so far working out nicely. I talked about this. I said as long as we remain below this downside line taken from the highest point of September, yep, I'm going to continue targeting the downside. Only if it breaks this downside line and pushes above the 1.3991, then yeah, I'm going to consider a move higher. BJPY, this one's okay-ish. And what happened here? Yeah, okay. GBP and GBPJPY, yes, and like I said, the upside scenario for me is the one from the highest point of October and the highest point of this year. If we can clear that, this 205.32 zone, I'm going to consider a move higher. USDCAD, we drifted back down, but this hurdle here, this is spectacular. This is providing very good support. This area is roughly between the 1.3976 and the 1.3986. If we get a clearance of this area and we drop below the 50-day EMA shown as the green line here on my daily chart, then yes, I'm going to consider a move lower. At this point, look, the commodity world, right? I mean, we saw oil strengthening a little bit, so that's where the drop is happening from. And in general, I think that the Canadian dollar does have potential to rise if oil does pick up interest, buying interest. So for now, let's be careful. Let's be cautious. I think that there are some geopolitical problems in the world where oil could pick up, but I'll talk about this when I'll talk about when I'll go into commodities. For now, we're watching this carefully. At the moment, I think that the Central Bank of Canada is not really the one that's shaping the policy here or shaping the agenda here. I think that, yeah, it's more geopolitical and oil related for this pair at least. Jumping into USDJPY. So yeah, Japanese yen continues to devalue, and this is where the BOJ wants to step in, but Sanai Takaichi doesn't want to allow the BOJ to go ahead and increase those rates. Look, the next interest rate decision by Japan should be in December, and let me just tell you when that's gonna be. Interest rate decision December 19th. December 19th. We're gonna get the well, that's the thing. Some sources say that we eventually will get a hike. Is that going to be the case? We'll see. I think that if the stock market does not sell off, where then people might just jump into the Japanese yen automatically as a safe haven, then I believe that there we could see the 0.75 plus 0.75% coming through in December, because currently we're at plus 0.5. So yeah. USDJPY, beautiful move, beautiful rebound here. Look, I mean, I talked about this. This was a good move here away from this territory. Now we're testing that psychological 0.80 zone. Very straightforward on this pair. If we do clear this downside line, then yeah, I'm going to go to the upside. Let's jump into gold, ladies and gentlemen. Gold. Okay, we are seeing a little bit of a rebound. That's fine. So from this upside line, so we're basically coiling up, and this is what I talked about on Monday. We are coiling up. We are stuck here in between these two trend lines, and basically, I think this is where we're going to trade for now until we clear one of the sides of this triangle. So this is where what I would prefer to wait for. A break through one of the sides. If we can get that, amazing. I think that more kind of buyers or sellers could join in, depending on the breakout direction. So for now, look, long story short, I know this is maybe not the most exciting. Sometimes I'm more, not the most exciting analysis here on gold, but most of the time I'm kind of, I know what's going to happen. But whenever you get something like that, like a coiling up moment, unfortunately you have to wait. You look, we can try to take advantage of this movement here inside the pattern. Yes, you could look. I can say it this way, that as long as we stay above the 4,046 zone, somewhere around here, which as you can see acted as a good area of support because it has been a good area of resistance back on the 31st of October. We also coincide here with the 20-day SMA and my Bollinger Bands, and that's why I would say as long as we stay above this little hurdle, there is a chance of a push higher. If we do drop below that, then we'll start examining a possible break through the lower side of this triangle pattern. Silver, okay, silver pushed back up. We're back above this $51 mark. We're getting closer to the 52. Let's see if we can reach that 52. But you know, look, somebody might say, hey Darius, what about the idea of a ascending triangle pattern where the barriers here, we are still above the upside line, so we're creating higher lows, but we are struggling to create a higher high. Theoretically, this could be a part of the ascending triangle pattern, but as always, a confirmation break is needed. If we don't get a confirmation break, nope, I'm not really going through this, because how many times I've seen this an ascending triangle breaking out to the downside? A lot of times. So that's why we always wait for the breakout. Platinum. We're near, and this one, look at this. This is a much better descending triangle than the silver one, actually, because we have a big gap here. But on platinum, it looks a little bit more bearish. So, but it's still, again, I'm gonna wait for the confirmation break through one of the sides of this triangle. Palladium, okay, palladium, I like this one. It's one of my favorite metals right now. But something tells me I think it could be dragged to the downside if we see gold and silver actually falling off the cliff. Copper. Now this one's somewhat in a range, but again, a clearance through one of the sides here is needed in order to consider the next short-term directional move. Sugar, my beloved sugar, it drifted back down a little bit, retraced, so. But now it's trying to climb and stay above this, actually trying to stay, it already climbed, but it's trying to stay above the 14.74 territory. Look, it was a good area of support and resistance before, so now we're kind of violating it a little bit, but I'm just going to keep it as a reference point. In general, this is looking a little bit more on the bullish side. Soybeans, what can I say? I mean, 11.5 we reached. Now we're seeing a little bit of retracement. I think it's all part of the deal. Now, let's say WTI oil. We broke the steeper downside line, and I talked about this recently. So, what can I say? I mean, at the moment, I will remain cautiously bullish in the short run, because overall I'm still bearish unless I start seeing major clearances of the 200-day EMA on my daily chart. Then yeah, I'm gonna go higher, but at this point, yeah, I'm gonna just consider some upside, but only as long as we stay above the $60 mark and we clear some of these key obstacles to the upside, and then we can end up testing this downside line, and then we'll go from there. But if we suddenly start falling straight away below the $60 mark and we stay below it, then yeah, I'm gonna consider a move to the downside. Now Brent oil, also similar story. We cleared this downside line. We're flirting with it right now, but oh, excuse me. But what can I say? For now, I am still cautiously bullish in the near term, and if we do remain above this downside line, I'm going to aim for slightly higher areas. Natural gas, just a quick glance, everything is fine. Look, I'm still considering the upside, but I think that there is a possibility for a larger retracement here towards the steep upside line drawn from the low of the 17th of October. And if it holds, we could see a rebound back up. Ladies and gentlemen, for dessert, our beloved Bitcoin. continues to trade below that 93,000 zone, and it keeps on flirting with that psychological 90,000 zone. We did visit the area, was it today? No, actually came very close to testing the area below 90,000. Just came testing this 90,000. So look, but the 93,000 continues to provide resistance. So in a way, if we continue to trade below the 93,000, I'm going to continue targeting the downside. I'm going to get more bearish with the downside if we do drop below the 90. We continue to trade below the 93,000, but if I'm going to get more bearish with the downside scenario, if we do fall below the 90,000, there we go. That was a lot to say. So yeah, for now, like I said, I'm somewhat on the bearish side unless we climb back above the 93,000 zone. Bitcoin Cash still loving that 500 level, and I think for now we cannot really do much here until we see a clearance of one of the sides here of this triangle. And the moment, yeah, it's not really doing it. It's just oscillating around the 200-day EMA. Ripple. Ripple is drifting lower. It found its way below the 2.19 zone, so as long as we stay below it, I'm going to lean to the downside. Ethereum. Ethereum is flirty. It's flirty. It has dropped at one point yesterday below the psychological 3,000 zone. Today we also saw that happening. Look, I'll say it this way, that I'm going to get more comfortable with the downside if we do fall and stay below the 3,000 zone, and then yeah, more sellers could join in. Litecoin is an interesting one. So if we do fall below the 90.30 zone right here, then yeah, great, more sellers here could join in. That's what I'm keeping an eye on. This is the hurdle I like. So hey, yeah. For the upside, look, 100.50. If we do get a nice clearance of that one, then wonderful. More buyers could join in. I think that's my simplistic approach on Litecoin. I think it could work out. Let's see if it does. Dogecoin. Again, a little bit of action here and there. Not to say, I don't want to say anything else here, but we did retrace, and I think that this might get dragged by Bitcoin and whatever is happening in Tesla as well. Polkadot, okay, look, the 2.77 territory is providing good resistance. So if we do climb above it, I'm going to lean for a larger correction back up. But if we continue to trade below that 2.77 territory, maybe actually we're not done with the downside yet. And finally, Tron. Now look, yes, we're having violations of this 0.2883 territory, but it's the problem here that I have is that we keep on violating it, but we struggle to stay below it. So maybe this is providing us with a good area of support here from where we could rebound nicely to the upside. But if we do stay below the 0.2883, I'm going to lean a little bit more towards the downside. Ladies and gentlemen, that is it. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. Thank you all. Thank you for watching. I hope you found this session useful. I know it's always a lengthy one, but the whole point of this session is for you to actually jump in with some questions if you wish. If you can always comment or maybe share some information. You're more than happy to do that. And I have my shorter videos, not live of course, but shorter videos available on our YouTube channel. Yeah, this is where you're watching this one right now. So yeah, ladies and gentlemen, don't forget to like and subscribe. As always, if you are already subscribed, thank you very much. That really helps me and the company a lot. So, ladies and gentlemen, thank you very much, and I'll see you on Friday. Yes, as always, the same usual 8 o'clock GMT time. Thank you very much, and bye-bye.